Most professionals don't struggle with accounting. They struggle with explaining accounting clearly in English. That's not an accounting problem. That's a language problem. Let me repeat. That is not an accounting problem. That is a language problem. So in real business environments, professionals don't just say numbers. They use clear, structured phrases to explain financial results, compare performance, and communicate insights. So in this lesson, I'm going to give you 50 professional English phrases used in accounting and some are used in finance as well. And this will enable you to explain financial statements, discuss performance, and sound confident in meetings. These are practical phrases you can start using immediately in your next report or discussion. Are you ready? Okay, let's get started. Welcome and welcome back. If you have been here before, and of course, a special welcome, obviously, to first timers. I am Coach Theodore, and I am your business English coach. And this is Mastering English Communication, where we like to provide courses and teaching to help you with your business English and also other aspects of social or personal English as well. Today's topic is accounting English. And this is going to be a special one because we're going to provide 50 professional phrases specific to accounting. But actually, there will be some benefit for those of you who are not accountants, but you're attending business meetings with accounting professionals and certain types of financial professionals. So look on this as a practical guide to those phrases, those business English phrases that are used in accounting, finance, and business reporting. And I designed the lesson so that it can help accounting professionals and other business professionals communicate with clarity and confidence. All right, let's dive right in. Let's start with financial statements. So the phrases that are following here are going to be essential when discussing financial reports in meetings or presentations or other types of written communication. So you want to go to these and use these to describe what the numbers show clearly and professionally. So here we're going to start with the phrase, the balance sheet shows. Here's an example. The balance sheet shows total assets of $5 million. So the phrase the balance sheet shows, you use this phrase to introduce key figures such as total assets, liabilities, or equity. So this is the format that I'm going to follow, so it's easy for you to follow the lesson. The income statement indicates. Use this when referencing profit, loss, or revenue figures. For example, the income statement indicates a net profit of $200,000. Revenue increased this quarter. A clear and professional way to report positive top-line growth. For example, revenue increased this quarter by 8% compared to quarter two. Expenses were higher than expected. Use this to flag cost overruns without alarm. For example, expenses were higher than expected due to supply chain disruptions. Next, we have numbers and amounts. Now, we use this type of language because we want to be precise. So this is precision and language because it matters when you are presenting financial figures. So these four phrases help you introduce and contextualize numbers in a professional, neutral tone that is easy for all stakeholders to understand. Total revenue was. This opens a clear statement of the top line figure. For example, total revenue was $3.2 million for the period. Net profit came in at. This signals the bottom line result. Net profit came in at $450,000 ahead of plan. Costs were reduced by. This highlights efficiency improvements. For example, costs were reduced by 12% through process automation. We saw a decline in. This is a neutral professional way to report a decrease. For example, we saw a decline in gross margin of 3 percentage points. If you like the information we're sharing so far, please give us a like. Thank you. Now we're going to look at comparisons. We have to be particularly accurate when comparing figures across time periods or against targets, and this is a core skill in financial reporting. So we're going to use these phrases, and these phrases will allow you to make comparisons clearly, whether the result is positive, neutral, or negative. Compared to last quarter. This will link current results to a recent reference point. For example, compared to last quarter, operating costs rose by 5%. Year-over-year growth was. This frames annual performance in a standard business format. Year-over-year growth was 14% in the retail segment. Higher than forecast. This signals a positive surprise versus plan. For example, revenue was higher than forecast by approximately $80,000. Below expectations. Diplomatically flags underperformance. For example, gross margin came in below expectations at 38%. Next, we're going to look at explaining changes. And we use this when the results differ from the plan or from prior periods, because stakeholders always ask, well, why? So these 4 phrases help you provide clear, structured explanations that sound professional and credible in any financial discussion. This was driven by, and this points to the primary cause or of a result. For example, growth was driven by strong demand in Asia. The main reason is. This states the most important factor directly. The main reason is increased raw material costs, for an example. This resulted from. This links an outcome to its root cause. For example, the shortfall resulted from delayed client payments. This is due to. This is a concise everyday phrase for cause and effect. For example, the increase is due to higher staffing costs. Now let's look at performance. This becomes important when you're reporting on performance that requires language that is objective and measured. And this is important whether the news is good, bad, mixed, or neutral. These phrases will cover the full range of outcomes and are appropriate in both written reports and live presentations. Let's first look at positive outcomes. We expected our targets. You use this when results surpassed the goal. For example, we exceeded our targets in 3 out of 4 regions. Performance improved. This signals a positive trend over time. For example, overall performance improved significantly in Q4. Now, let's look at neutral or negative outcomes. We fell short of expectations. A professional way to report underperformance. For example, we fell short of expectations in the consumer segment. Results were stable. This describes consistency with no significant change. For example, results were stable despite market volatility. Next, let's look at budgets. So budget management, this is no secret, is at the heart of accounting. These are essential phrases that will help you communicate budget status, variances, and the need for corrective action in a professional and measured way. We are within budget. This confirms spending is on track. For example, we are within budget for Q3 with a surplus of $15,000. We exceeded the budget. This flags an overspend requiring explanation. For example, we exceeded the budget by 7% due to unplanned maintenance. Budget variance is. This introduces the gap between plan and actual. For example, budget variance is $30,000 unfavorable in the marketing department. We need to reduce costs. This is a direct call to action when spending is too high. For example, we need to reduce costs and operations by at least 10%. Next, we have forecasting. We use this language in a forward-looking manner. Right? So this language signals analytical confidence and helps stakeholders understand what to expect. Use these phrases when presenting projections, outlooks, or anticipated trends in financial discussions. We expect growth next quarter. This is a confident, positive projection. For example, we expect growth next quarter of approximately 6 to 8%. We anticipate a slowdown. This signals caution about near-term performance. For example, we anticipate a slowdown in consumer spending through year end. The outlook is positive. Summarizes a favorable forward view. For example, the outlook is positive based on improving order volumes. We project stable performance. This indicates neither significant growth nor decline ahead. We project stable performance for the next 2 quarters. Now let's take a look at risk. It's important in identifying and communicating financial risk with the right language. This is a critical responsibility for accounting professionals. These phrases help you raise concerns in a measured, professional tone without causing unnecessary alarm. There is a financial risk. This introduces a risk clearly and directly. For example, there is a financial risk associated with the new contract terms. We need to monitor expenses. This signals that close oversight is required. For example, we need to monitor expenses in the logistics division closely. Cash flow could be impacted. This flags a potential liquidity concern. For example, cash flow could be impacted if receivables are not collected on time. Potential downside includes. This phrase opens a discussion of negative scenarios. For example, potential downside includes a 5% reduction in net margin if costs rise. Now let's take a look at opportunities. Now, a part of being a great or excellent financial communicator is don't just report problems. You want to also highlight potential. And these phrases help you present growth opportunities and efficiency gains in a constructive, forward-looking way. We can increase revenue. Opens a discussion of growth potential. For example, we can increase revenue by expanding into the mid-market segment. There is an opportunity to reduce costs. This identifies a specific area for savings. For example, there is an opportunity to reduce costs in procurement through bulk agreements. We can improve margins. This highlights efficiency and profitability potential. We can improve margins by renegotiating supplier contracts. This opens new opportunities. This frames a change or result as a positive development. For example, this partnership opens new opportunities in Southeast Asia. Clarifying. Financial presentations often involve complex data. So these phrases that follow will allow you to pause, restate, or simplify your message. This ensures your audience understands the key points without feeling lost or confused. Let me clarify. Use when you sense confusion or want to add precision. For example, let me clarify, this figure includes both direct and indirect costs. In other words, this introduces a restatement for clarity. For example, in other words, our gross profit margin has improved by 2 points. To put it simply, this signals a plain language explanation is coming. For example, to put it simply, we spent more than we earned this quarter. What this means is This translates a number or finding into practical language. What this means is that we have 3 months of cash reserves remaining. Now we look at presenting. Smooth transitions and audience engagement are the hallmarks of a confident financial presenter or any presenter. These phrases help you guide your audience through the material, which can be complex, and invite questions and keep the meeting on track. Let's review the financials. This is a natural opening to the financial section of a meeting. Let's review the financials for the third quarter. Let's walk through the numbers. This signals a structured step-by-step review. For example, let's walk through the numbers for X, Y, and Z. Any questions on this? This invites stakeholder engagement before moving on. For example, any questions on this section before we continue? Let's move on to the next item. This is a polished transition between topics. For example, let's move to the next item, our cost reduction plan. Recommendations. So as an accounting professional, you are expected to not just report, but to advise. These phrases help you communicate recommendations with authority and clarity, positioning your analysis as actionable business insight. We should focus on cost control. A direct recommendation to limit spending. For example, we should focus on cost control in all non-essential departments. I recommend increasing investment. This advocates for allocating more resources to a priority area. I recommend increasing investment in digital infrastructure is an excellent example. We need to address this issue. This calls for urgent attention to a problem. For example, we need to address this issue before the end of the fiscal year. Next step is to review. Defines a clear, immediate item. Next step is to review the variance report with the operations team. And then, of course, closing strong. How you close a financial presentation is certainly just as important as how you open it. These 4 phrases bring your message to a confident conclusion and motivate your audience to act on what they have heard. To summarize, this opens a concise recap of the main points. For example, to summarize, revenue grew 10% while costs remained controlled. In conclusion, signals the final thought of your presentation. For example, in conclusion, our financial position remains strong heading into Q4. Key takeaway is this isolates the single most important message. For example, the key takeaway is that disciplined cost management has protected our margins. Let's take action. This ends with energy and a clear call to move forward. Let's take action on these recommendations before the next board meeting is a great example. So you want to keep the momentum going. See the next video in this series. It's going to pop up on your screen. And please like, share, subscribe, and comment because it helps us help you. And I will see you next time as we continue our linguistic adventure together. Take care, everyone.